We'll be closely tracking the results of Tata Steel, given the kind of volatility that the entire commodity basket is witnessing at this point of time. It's going to be very important to see how exactly managing is navigating through these very uncertain times. Also, given the fact that when you're actually looking at Tata Steel, there are so many moving parts and there will be quite a few factors and parameters that the markets would be closely looking at, especially from the management commentary. So now one of the most important things to watch out for would be the kind of results that Tata Steel Europe actually manages to deliver. When you're talking about Tata Steel Europe, you have to look at a couple of factors there, realization trends there, EBITDA per ton there, the demand scenario, and also how exactly are the entire operations panning out in terms of global demand coming up as far as the entire steel cycle is concerned. When it comes to the domestic market, important to note that a lot of companies have actually initiated price hikes in the last 2 months, and it's going to be important to note whether these companies have actually managed to sustain the price hikes, whether demand has been strong enough to absorb the kind of price hikes that they have actually initiated. Now, when you're talking about the domestic market, other important factors to watch out for is the fact that a lot of companies are facing severe inflationary pressures like coking coal prices uptick and also other prices that have gone up significantly, especially diesel. While we have seen excise duty cuts coming in as far as diesel is concerned, it's still going to be important to note that prices are significantly higher, and how is it that players like Tata Steel are mitigating the impact of inflationary worries. The other important thing to watch out for would be the trajectory of debt, and this is something that is going to be extremely important to keep note of. When you're talking about the expected results, revenues are expected to be northwards of 59,000 crore, up almost 59% on a year-on-year basis. EBITDA is expected to be northwards of 19,000 crore. Margins are seen at 32%, expanding both sequentially as well as on a year-on-year basis. Profitability is seen close to 11,800 crores. A key important point would be the fact that expect a margin contraction coming in due to increase in coking coal prices as well as raw material inflation. Consensus forecasts imply a $200 per ton EBITDA per ton figure as far as Europe operations are concerned. This is against $89 per ton EBITDA realization on a per ton basis when it comes to Q1. Tata Steel is expected to deliver and reduce debt by close to $1 billion this particular quarter. India's sales volume has been reported higher by 12% on a sequential basis, and profitability in Europe is something that is expected to increase quite sharply. Overall, expect a good quarter from Tata Steel. In fact, analysts believe that even if the company manages to meet street expectations, it would be quite positive as far as the stock price is concerned.